Welcome to the Lighthouse Conversations, a show featuring entrepreneurs and tastemakers from the world of art, culture, tech, and of course food. I'm your host, Hashem and Feras. I'm joined today by Feras Jalbout, founder of Baraka, a Dubai-based fintech company offering commission-free mobile trading platform. Baraka received regulatory authorization from the Dubai Financial Services Authority earlier this year and is now live for all interested parties. Baraka allows users in the region access to over 5,000 US listed securities, so names like Apple, Facebook, Microsoft, you name it, without any minimum investment requirement. I should also mention that I'm an angel investor in Baraka as part of my own early stage tech portfolio. We get into Feras' professional journey as well as his own investment background and the mission that he's driving through Baraka. Oh, and how the transition from investor to entrepreneur/tech founder also shows up in what he wears. I mean, the listeners can't see you, but you look like a typical now tech startup entrepreneur. Black t-shirt.
That's how I dress now.
Is that how you dress now?
Yeah.
Is that conscious or is that part
it's
of
conscious. Every morning I wake up thinking, how can I look more like a tech entrepreneur? And it's always the same answer.
Because I tell you something, I mostly only wear black and white.
Yeah.
But now I've done a new thing. This is very recent. You haven't. It's not today, but typically, I wear very colorful shoes.
Oh, okay.
So I've been wearing these like orange sneakers. I've gone wild with the sneakers.
Yeah.
It's a way at 47 to express myself after a decade of black and white.
So I'll tell you honestly, but why do you do it? Or why did you do it?
I tried a few other things and now it feels weird. If I would come in a green t-shirt, I would just feel really weird. So I'm very comfortable in black and white. If I put on 10 kilograms, it goes more black than white. But other than that, I stick with the black and white.
I think I kind of do it for the efficiency of it.
It is very efficient.
Like, I got to tell you, like...
Steve Jobs said that.
Yeah,
you don't have this.
You're trying to make me seem like I'm trying to be Steve Jobs. I'm not trying to be Steve Jobs.
Yeah, this is Isamaki. Well, turtleneecks, right? And he said,
yeah, I'm not wearing a turtleneck, by the way.
And he asked Isamaki to give him like 50 of them.
Yeah, just for the listeners, I'm not wearing a turtleneck. I don't have, little wireframe glasses, and it's the fact that I don't have to think about it. You just wake up. You kind of like I own like multiple pairs or multiple shirts of the same thing, and it's just super easy.
It is. No, and it's. I think that's one of the joys of running your own thing is that you can wear whatever you want. You can
do whatever you want.
Yeah, you can do whatever you want for the most part.
It may not be good, but you can.
All right, let's jump in. So I'm curious. So you grew up in Canada, second generation Palestinian. Did you always know that you would want to do your own thing? Were your parents entrepreneurs or ran their own businesses? Or you're from a family of doctors and engineers and now you've kind of just cut the umbilical cord?
I guess I kind of cut the umbilical cord. It wasn't really that we were doctors and engineers, but everybody kind of just had jobs.
Okay.
I think various people throughout my extended family had businesses. And that's always been the case. Not my immediate family. I think it's probably a mix now that I think about it. But it wasn't instilled in me either way, like you should be an entrepreneur or you should be an engineer or you should be, there was no directive. And I always kind of felt like I had a
thing for business.
Yeah, a calling for it for sure.
That's interesting.
And I tried multiple things at different times, different stages of life. But
what kind of things?
What did I do? Like one summer we had like a small landscaping business when I was a student.
Interesting.
Multiple things.
It's interesting
small little things.
It's interesting. My parents were both academicians in academia. professors in university. So business was not part of the conversation. Conversation was mostly very theoretical.
Right.
So me today, sort of running my own business is definitely an anomaly in many ways. And I didn't grow up around it. And I think a lot of people that I speak to that have their own businesses or if they grew up in that environment with the pluses and minuses, right? Because there's a certain angst that comes with it. There's a certain up and down. I didn't experience that growing up.
Right.
And most of our conversations were very theoretical, to be honest with you. Didn't speak much about things that are actually happening.
Right.
So to be now in a business where it's all about what's actually happening is strange.
Well, what did you think you were going to do when you grew up?
I kind of looked up to my dad at the time. He was an economist, so I guess I studied economics and
okay.
I guess I assumed at the time that I would probably go on and do a PhD and do something kind of academic. I didn't, to their disappointment. But my wife did at least somebody in the family did. But, I didn't know. But it certainly never occurred to me at the time that I would start a business. And I didn't know much about business. My exposure was very limited. That's why I'm asking. So you kind of knew that you would want eventually to do your own thing.
Yeah. I always had that feeling.
Okay.
I just didn't know how it would shape up.
And you wind up, so in the early stages of your career, you were in finance, broadly speaking, private banking.
Yep.
Was that a conscious choice to go into some kind of financial?
So no, not really. I mean, it was kind of.
How did it happen?
It was kind of, when you graduate university, you kind of, in some sense, end up where you end up.
Sure.
For various reasons. I got a job in banking, and I thought, hey, I'll try this, and then it just stuck for 10 years. And what I found in that was the joy that I found in investing. And so I love investing, and so I didn't.
Did you start investing at a young age?
No, personally,
investing,
no.
Okay.
And this is the thing now with this mission that we're, it's like people should invest at a young age.
Yeah.
And so it's part of
things have changed. We'll talk about that in a minute.
Yeah. But it's part of, it's part of the excitement that gets me going, because I didn't have that kind of know-how when I was younger.
And also it wasn't readily accessible. Let's also be very clear, right?
It wasn't.
So if you did have the know-how at 18, it's not like you could have found an app like Baraka, we'll talk about in a second, or a website, or you didn't have any of that.
Yeah, but also it's broader than that, right? It wasn't part of the dinner table conversation.
No, it wasn't.
Like, I didn't grow up like with family members sitting around talking about, their stock portfolios and and so it's different. The upbringing was different from that perspective. And you look at like people who have been doing it for generations, or families that have been doing it for generations. It's part of their dinner table conversation.
Yeah, I think you are right.
To some degree, right?
You are right.
And so it becomes natural. Yeah, you invest, you have, like retirement plans, you do all this stuff. And that's not, I don't know how it was for you.
Well, it was very different in the sense that when I got my first job on Wall Street, I was trading every day.
Right.
But because that was my day job, it wouldn't have occurred to me to actually have my own portfolio. Also, I knew nothing about equities.
Exactly,
So I didn't for a while. And then I did the usual thing when you're in the States. I opened an E-Trade account and I started slowly doing some of that. And I learned and I made mistakes and all of that. But you're right. It wasn't part of popular culture generally. I'm also 10 years older. So it was a bit of an earlier time. So you didn't start investing right away, but you liked working in finance.
Yep.
So let me actually go back to how did you wind up coming to the region?
So I came to the region probably 15 years ago. I had some family here. I had just finished university. I had no plans on staying here whatsoever. I grew up in Canada. I had finished 20 years in Canada and didn't expect to kind of come to the region to stay.
And you came straight to Dubai?
I was in Qatar. And I ended up getting this job.
With a bank?
With a bank. And I had some family there I was visiting, and I ended up just kind of staying. And my plan was to stay for a couple of years to save up some money to pay off my student loans. And it's been, 15 years. And so I kind of changed a couple jobs and, evolved in my career, and then ultimately ended up in Dubai about 6-7 years ago now.
On the buy side, investing side, if you want to put it this way.
Right.
And that's a big jump for maybe people that are not in finance. That might sound like the same thing, but it really isn't. So private banking essentially is a relationship manager job, where you are managing your clients, high net worth individuals.
Right.
You may give them some advice, but really mostly your job is handholding. I'm not belittling the job at all, but I'm saying you're not really making investment decisions too much. That's a pretty big jump to then be working with a family office and in fact, making investments in sectors that are quite complex, because in your family office, that's when I got to know you.
Yep.
You were investing across the gamut, mostly in private companies, early stage companies, tech companies, but there's a complexity that comes with that.
For sure.
Did you have that skill set, or did you learn on the job?
No, I think you definitely learn on the job. I mean, I didn't have that going in, but you have a basic understanding. Coming out of private banking, you have a basic understanding of
markets,
building asset allocation models and markets, and so like the base was there, but the assets that we got into in that role were completely different.
Yeah.
Right? So my world was upside down.
You now have to know companies. It's not just about portfolio management.
I mean, you looked at companies there because you look through an equity or a bond to see the underlying company, but we weren't looking at tech companies per se.
At such an early stage.
Yeah, and I wasn't used to seeing companies that were losing money for 3,
Decades
4, 5
sometimes.
years, decades. And I was thinking, like, why would you invest in a company that, would lose this much money and not invest in like an equivalent?
Apple. It's actually very interesting because we're seeing now globally a trend that I know you're aware of institutional investors across the different. So if we broadly say you have early stage companies, we call venture capital, late stage companies, it's called the private equity, and then public companies. You are now seeing, for the first time, really a massive crossover. The early stage guys like Andreessen and others are starting to move up the curve a little bit. And definitely the late stage guys and the public guys are moving earlier in the stage of. So these things are, for the first time that I've seen it, starting to get muddled. Historically, people had a very profound knowledge base of one or the other. So you had to make that jump. How did you get your head around that?
I think it took me a long time. I think what I learned after a few months was it's not really understanding every company as much as it is understanding the mentality behind how to invest in technology or how to invest in growth businesses. You have to put aside what you think, how you perceive value. Traditionally you perceive value as, maybe free cash flow or whatever, other metrics that are more
profitability.
Yeah, profitability, silly things,
Things that used to matter.
That used to matter, exactly. But then when you invest in growth businesses, you're really investing in the growth. And so you just have to make that switch. And so it took me a while to understand that I had to rewire my brain. But then eventually, that's what you have to do.
And it's not just
and I'm still, you still go through it, right?
Yeah.
I'm looking at crypto and NFTs and new technology that I'm thinking like, wow, like, how do you look at this? How do you assess this?
So there's a part about venture capital, especially the very early stages, that very much is about. We have someone else on the podcast here, a venture capitalist, who spoke about. For him, it was all about the team. It was all about the founder or the founders. Versus again, going to public markets company, Apple. Yeah, sure, it was important that they had Steve Jobs and. They now have Tim Apple, as they call him.
Tim Apple, yes.
But
heard of him.
But ultimately, it's about the company, really. So, how did you make that switch? Because that's another switch as well. If you're meeting with Hashem and Hashem is coming in and saying, for us, I'm an early stage company, opened a year ago, just starting to have some revenue. How much are you looking at me versus at my business model?
I don't know percentage-wise, 70-30?
70 me, 30.
Pretty much. And now
that's a complete departure from what you were doing before, where that doesn't come in.
It's
you don't go and ask who the founder is of a public traded company.
It's night and day.
Yeah.
It's completely different. The way that you look at it is completely different. And it's very much founder-driven, like you said. And that's why you see a lot of early-stage investing with no due diligence, or very little due diligence and very little kind of like prodding around the business model and so on. Because ultimately the founder, if they're a good founder and you suspect they're a good founder, they will they'll find a way. They'll find a way. And it's really all about that, right? And I never used to think like that when investing in equities and bonds and so on and so forth. So this is very like...
As someone who dabbles into early stage investing, that was for me also a very big... departure for me to start saying I have to look at this person. You know what? Even if the business model is not perfect today, this person will figure it out.
Yeah,
and that's a leap of faith that's not easy to make when you're not used to investing like that.
Yeah, and in most cases, like you also have to look at the business and the market and the TAM and all of these things that are important.
TAM being total
addressable market, and see if you think the founder is lining up with your,
the opportunity.
Yeah, with the opportunity. And that's the most important thing, is that also the timing really matters, and all of these kinds of different factors that impact how you think the business will work. So if somebody's coming to you at some point saying, I want to, launch any business, but you think the market is completely moved away from that, as much as you like the founder, it's very difficult to get behind that, right? If they're selling you, very, very a silly product at a time where you think just doesn't make sense, it's tough to get behind. But ultimately, if the timing is reasonably okay and the founder is just really great, you probably just you'll run with it, right?
And this is a perfect setup for what you've done. So we'll talk about that. We fast forward a little bit. You became that founder that went into a market.
I'm becoming a founder.
Well, you're becoming a founder with a large tab. So just to be clear here for our listeners, total addressable market. I'll explain it, and maybe you can explain what your company is about. So you launched a company called Baraka.
Yes.
earlier this year,
Yes.
formally, and it's a trading app essentially, right? So basically, you trade. I go on the app on Baraka, and then I can trade stocks.
Yes.
And very simply put,
Yes.
commission free.
Yes.
And when you made that decision, so I'm going to go into Baraka in a second, but I want to talk about the jump. So you've just very beautifully explained how you look at
Gonna grill me about
founders
something.
and how you look at the market. When you do that analysis on yourself, if that's at all possible, where do you line up? I mean, I'm not telling you to give us an estimate of your own capabilities, but you looked at that market. This market is obviously a new market, very exciting, but also relatively competitive. It's a business to consumer model, which are notoriously difficult
Yes,
and
which
expensive
I'm learning
to build.
now.
Right, exactly. So walk us through that decision. Did you one day wake up and did you, for example, meet a company that's doing this and you said, oh, you know what? I think I can do that. Or did you always know that eventually you will do it? Well, you kind of knew you wanted to start your own business, but did you know you're going that direction of trading?
I think what's interesting with this business is that it lines up with my experience, my passion, and the market opportunity. And so, I often think about this, and I get asked this question: is like, why this? And it's very much, I didn't have to think too much about this. This was very much in me. This is like
Intuitive.
Yeah, it's very intuitive. I invest personally. I invest professionally. I love it. You know that we have many chats about investing, and in my last
and you're a bit of a trader yourself. I have to say.
I used to be.
I've known
anymore.
you long enough now to know that you have a little bit of a trading mentality.
A little bit, not too much. And I don't, I don't recommend that people go trading.
No, I completely understand. I'm not saying it's a recommendation.
If you zoom out of that and you go back to your question about kind of investing and why this business, it's very much about proving a thesis. And so when you're investing, you're proving a thesis, at least the way that I used to invest, right? You are looking at a market, you're assessing it, you're seeing where the gaps are, you're looking at the underlying companies, you're trying to find the right company that you think will fill that gap and has the largest market opportunity and the founders that will execute that, basically, right?
Correct.
And I looked at this and I thought, man, I just don't see something in this market that I want to use.
Correct.
And so I set out to kind of create that.
In fact, it didn't really exist. If your average person, let's say sitting in Dubai or in Cairo, wants to trade US stocks today, he either has to be wealthy enough, connected enough to have a foreign account, which is not likely, or a second residence, or he really doesn't have many choices.
Yeah, they have to use like
call a broker.
Or they have to have, use like one of these legacy apps that are kind of, exist in the market that have been around for a long time, but exactly. Don't really give you the kind of user experience that I would, the experience that I wanted to produce in the app that we've.
It's a beautiful app, I have to say this.
We're just getting started. I don't feel like we're there yet. And there's many ideas and many things that I want to do. And the team's always stopping me and saying like, hold on, let's get this, let's finish this part and move on to the, and that's the right way to do it. But yeah, I think that's pretty much what, that's the rationale behind it. That's the reason it all came together, is basically trying to prove a thesis that I think we can create something in the region that is of value and size that's
from the region.
But people would say to me, it's funny because it comes from my experience, like, where do you trade? Which platform do you use? And you tell them, the like 3 or 4 that exist in the market. And quite often they'd come back to me and they'd say, it was a terrible experience. I couldn't open an account, or, I hate the interface, I don't understand it, whatever. And like, I swear, and I've mentioned this a couple of times to people, it's like the thing that really kind of put me over the edge was why I started this business was people would say to me, I'm just going to wait for Robinhood to come to the region.
Yeah, that's right.
I swear.
I think a lot of people said that.
And it was just like, what? Well, you'll be waiting for a while, but like, why isn't anybody really tackling this?
Feras launched Baraka to the world in 2020 and has raised more than $5 million in funding to date. In fact, one of their investors is Noah Capital, whose founder, Khaled Talhouni, was on the show a few weeks ago, and I had asked him how they go about investing in companies.
First and foremost, and this is true at the earlier stage, right? The earlier you are, the more true this is like nothing matters more than the founder, right? Like that's kind of critical, or the founder and then the management team that the founder has brought around him. Because when you're at like seed or pre-seed or that very early stage, what you start with is very rarely where you end up with, right? It's a very, very different kind of like outcome, and that's very ephemeral and intangible. It's hard to, I couldn't kind of like assess that in a very objective way. There's certain things you look for, like past experience, for example, like I said, the Kareem Mafia, the ability to intellectualize problems, but then equally the ability to operate and to kind of bring a team around you. These are all highly intangible and subjective. So, sometimes it's a bit of pattern recognition that you kind of try to kind of identify that. And then when you can marry that to a thesis, that's a hypothesis. And then you kind of dig into it and say, like, why is that a gap? And how do you solve that gap? And then if you can marry that with a team that's working on solving that problem, that is the right team, that's the secret sauce. You usually get it wrong, one side or the other. But that's kind of the core proposition.
We'll continue our conversation right after the short break. Welcome back. You're listening to our conversation with Feras Jalbout. When I disintegrate this a bit, you have a front-end piece, which, as you said, is all about the user experience, the simplicity, the ease of use, lack of friction, I would imagine.
Yes.
Because ultimately you want Hashem to press trade, click on trade, and, buy or sell XYZ. Behind that, there's a very complex tech stack. You do not have that background, and it's quite complicated. I don't have that background either, but, it's just companies I invest in. Did you from day one find a person that you felt can kind of almost be your counterpart on the tech side? Just that people don't sell you the wrong thing, because you have this beautiful idea. You probably have good sense of aesthetics and user experience because you use it yourself.
Yep.
But then if I come to the back end and I tell you, for us, use this or that, how would you know? I mean, how would you even do
You spend a lot of time talking to people, understanding from various people, like, what have you used? Talk to different founders, talk to, people in the industry. You can pick it up.
Sure.
Like if you do enough reading and you
can.
do enough research, you can pick it up.
But it was daunting. I'm just trying to say that. I would imagine that piece
incredibly daunting.
Okay.
And so it's funny because a lot of founders kind of reach out now and say, how did you start? And how did you get over that, especially this hump? And I think the point is you just keep going, right? You'll spend a little bit more money than you should have, and you'll spend a little bit more time than you should have. And like things won't be as smooth as they will be in the future, hopefully, if you keep going. But it's okay. And so I think that's the thing that you have to remind yourself is like, it's okay.
Yeah.
Nobody expects you to know every single detail of the tech stack.
No.
You have to hire good people who manage this. And so yeah, I mean, either consultants or, employees or other founders or whoever you bring alongside, you have to trust their opinion. And I think it's kind of like, don't get too deep, too quick. With something that you don't necessarily know too much about. Yeah.
And from the front end piece, were you from the outset targeting a particular, were you looking at Gen Z or millennia or my age, which are, I don't know.
Over 50? No, we don't. Gosh. We don't target over 50.
This is offensive. For the record, I'm 47 and feel like 46. So
look like 45.
No, so did you have any particular demographic in mind, or were you just like, I'll build and then we'll see who's be attracted to it?
Again, going back to like proving the thesis, my thesis was always that under 30 is
big opportunity,
underpenetrated.
Okay. Do we have statistics for the region, outside statistics of how many under 30 actually care to trade or trade? Does the numbers exist? I don't know.
We have some data.
Okay.
I don't think it's conclusive, so I won't give a number.
But it's very low, I would imagine.
I think that people in general in the region are really underinvested.
Across
incredibly underinvested as a household, per household in the region. I don't think that we're even.
But are you comparing us to the US? Because anything would be underinvested compared to the US.
No, I think if you look at other emerging
Asia,
markets,
Europe, okay,
even China and India, we're very low. Very low.
Is it because our own capital markets are not very developed?
I think that's part of it. And I think also the culture around it doesn't exist. Like I mentioned to you, like the dinner table conversation,
Yes.
like I think that like a lot of people in the region probably, face the same thing.
Yeah.
I don't know how many people talk about investing in the region. I think money is taboo in the region as well. People don't generally don't talk about it.
It's interesting. So Lehman crash for a period about 7 minutes, there was a moment where it felt like, you know when you kind of take the cliche of like you go into a taxi and the driver asks you about a stock, and that's when you know that like it's a bubble.
Yeah, this was in Dubai.
Yeah, and this was everywhere. So I remember very well going back to Egypt and being at the airport, and I worked for EFG at the time, and the passport officer, looked at my passport, saw EFG, smiled, and then went up or down. He wanted to know if the stock is going up or down. And then this was literally peak, 6 months before the crash.
Right.
And I remember going then into my car and being like,
I got to sell everything. I got to get out of the market. This is it.
I called my then boss and I'm like, I just want to let you know that, I think either the stock I don't know what's happening with the stock.
Exactly.
But so that moment did exist, but you're right. I think if you ease out across periods, yes, it's probably a very low number, and it's not part of the dinner conversation.
It's not. I think it's changing, and I think it's starting to emerge here. But if you look at other markets, the US or Western markets in general, what's very interesting now is that you have a whole generation of new investors that are between the ages of 18 to 30, who are talking about investing on a daily basis.
Yes, correct.
Investing in markets, investing in crypto, investing in real estate. And you can invest in any asset class now, which I think we should touch on. But
yeah, for sure.
You have a whole generation of people who are talking about investing. To me, that is good. That is good for society.
Why is that good for society?
Because being financially literate is a positive thing.
Could you not
for
make
your
a case
for your own self, for your household?
Many of them don't have and I'm going to get into how you are trying to create, which I think you are, which I think is great. You're trying to educate your investors as well. You're not just encouraging to trade. There is an argument that, I'm not going to talk about you, I'm going to talk about Robinhood. It's a very well-known argument, as you know, that, there's a lot of speculative froth. How are you working on the literacy piece? So if Hashem is 18 years old, comes on your app, has a vague idea what a stock is, what a bond is, what do I do?
You jump on our app. There's a whole section we call Learn.
Okay.
Where you can read about different topics that relate to finance. But then also we have a quiz. We've built this kind of in-app quiz where you can actually, read the article about that topic and then answer 10 questions.
Oh, interesting.
And there's no cost to it or anything. It's just about you spending the time, understanding the content, answering the questions, building your knowledge, building your confidence. And I think going back to what you were saying is, some people are trading recklessly, but is that the majority of people? Is that the majority of investors?
I don't know.
I don't know the numbers. I'm not going to just, throw numbers out, but I think people being invested in the market and seeing ups and downs and understanding the emotions that come with that is a good thing over the long term. The bad thing is leverage and being over leveraged and, losing a lot more than you can afford.
So leverage, just to be very clear, is people borrowing and investing with the borrowed money as opposed to their own money.
That's always very dangerous because, and so we get asked about this all the time around, the Robinhood situation and people trading and so on. But this doesn't just happen with next-gen consumers, right? This happens with hedge funds, it happens with family offices, it happens with government institutions and sovereign wealth funds. And so it happens.
Yeah.
I don't think you can say that, next-gen consumers don't know what they're doing. There's a lot of people in the industry that probably just take excessive risk, and that applies across the board. It doesn't apply only to, a population of, under 30, for instance. And so it happens. It's part of the market, unfortunately. But it's there. It exists. But
no, for sure.
The more you educate, the more you learn.
And it exists in every industry. It's not, people don't just leverage for stock trading.
Oh, everything.
But I want to push you on that for a second. Could you not make the case that trading, I understand it as a service that Baraka provides, but what good does it do for society? And I'm obviously being a bit, not hypocritical, but I come from a background where I've spent, a good chunk of my life doing that. But I remember actually going to a therapist, believe it or not, and her telling me, so let me understand what you're doing. So you make rich people richer? I was like, if you put it that way, I need a lot more therapy. But my point is, so, can you make a case here that there is value, not value for you as a company, but value for society, for Hashem buying and selling stocks?
It's not. Let's not equate
matter.
trading with investing, right?
Okay.
Or trading in general is probably fine. But over trading or over leveraging these things, that's where you want to be cautious, right? But investing in general, as you build wealth for 10, 20, 30-year period, and it compounds over time, that's tremendous, right?
Agreed, but then do I need your app for that? Sorry, I'm just being, in other words, if
You
I'm
can
buying
use any
Apple
app
and I'm
for that,
gonna,
right?
yeah, but if I'm gonna buy Apple and keep it for 15 years,
But why not? Why not use the Baraka app then?
Fair enough.
Right?
Fair enough.
And so that's the point. I mean, we don't necessarily want you to trade.
Okay.
That's not our prerogative. What we want you to do is invest. And however you invest, whatever stocks you want to pick or ETFs you want to pick, that's on the consumer, and they should do their research and figure out what suits them and their risk appetite. But I think the message is, look, very simple math, and you know this, having been an investor for a long period of time. If you buy the S&P 500 over the last 30, 40 years, if you buy it on a monthly basis for the last 30, 40 years, up and down through all the cycles, it compounds over time. You would have made 10, 11% on an annual basis. If you compound that over a long period of time, it's a tremendous amount of money.
correct. When you overtrade, it's not.
When you overtrade,
you destroy value.
You destroy value, exactly. And so the idea is, and so a lot of our material, the investment material, is around this, right? Investing over the long term, understanding how to invest over the long term, understanding the terminology around investing. I mean, that's the starting point. But all of this is positive. Households that get wealthier, that are more financially literate, their children that grow up more financially literate. It's all very positive in the sense that you consume less, you invest more, you understand economic cycles. That's good. To me, that is good.
I broadly agree with you.
Do you teach your kids to invest?
Actually, my son is supposed to present to me a short presentation. No, it's true, on the difference between Bitcoin and Ethereum. I mean,
nice for your own investing.
For my,
exactly.
I'm too lazy
farming out the research.
Yeah, exactly. I have. Yeah, I know. I shouldn't say this. People are gonna sue me for. I mean, he's 10-ish, but
no, that's a good age.
I think it's a good age. I want to talk about that actually for a minute. So, obviously, there's a huge move towards digital currencies.
Yeah.
There's even sovereigns like El Salvador that are now allowing digital currencies, cryptocurrencies, to be part of their day-to-day life. What is your view on cryptocurrencies in general, and would that be something that we would be able to see on Baraka?
It's something that we're definitely watching.
Okay.
I'm personally extremely fascinated by it. I don't know it well enough. I mean, I don't know the protocols in great detail and that kind of a thing. I, obviously follow the news. And I know Ethereum and Bitcoin and what's happening in space.
The main currencies, yeah, the main coins.
But I think what's interesting is what comes of this, right? Which we can't predict. We don't know where this leads to. And so governments creating their own digital currencies is great. And I think, it can take the place of traditional currency, which is fine.
Correct, because the whole point of cryptocurrency is entirely deregulated.
Exactly.
Right? So no one's regulating this.
So I don't actually go to the bank machine and pull out dirhams. If it's a coin, that's traded electronically and that replaces my, my dirham bills, great. That works very well for me. It probably has a lot of benefits, for consumers, like being able to transfer faster when you kind of remove SWIFT networks and these kinds of things. So I think there's a benefit to it for sure, for consumers. What's very interesting to me is where does this go? And so we talked very briefly about NFTs and about all the stuff that's emerging around this.
Smart contracts
for everything. The removing middlemen from basically just about any transaction. That's incredibly exciting. And then also when I think about not just our business, but where the space retail investing goes in the future, what these smart contracts or these kinds of coins could enable in terms of investments. And so if you remove the middleman, you potentially create a new investment asset class behind these coins. So the owner of these tokens will benefit from their production value or whatever they produce. And so that becomes quite interesting to me.
Do you buy that vision of, I don't want to get off topic, but the metaverse and, cryptocurrency? And I mean, I think it's fascinating. I mean, it's so interesting. I was listening to Kara Swisher the other day. Obviously, she's kind of older.
She's about your age.
Scott Galloway. I'm sorry?
She's about your age.
She's not my age at all. Minimum 15-year difference, I want to say. So Kara Swisher,
It's a recurring theme about Hashem's age.
They were talking about the metaverse, and both her and Scott Galloway were saying, rubbish. You talk to, of course, people 20 years younger, or people like analysts like Matt Ball and some of these sort of people that talk about it all the time, and they're like, this is happening.
Don't
and
discount anything.
No, 100%. But do you buy that utopian dystopian?
Well, I don't discount it because I don't know where it's going to go, and I'm not. I might not be the target consumer for that. Technology.
Well, I'm asking this because crypto is very much part of that. I mean, kind of a
yeah. So it's everything is it's a whole digital realm that right. It's the metaverse,
and an interchangeable
and
physical
internet
and digital
currency.
realm.
Yeah, totally. I mean, I don't discount it. I don't.
Would you want to live in that world?
Yeah, why not? You?
I don't know. It freaks me out.
How can you say no?
Well, I may not have a choice.
Yeah,
it
exactly.
may happen anyway.
Exactly.
But the question is, if I had a choice, would I want to be part of the metaverse?
But you don't know what the metaverse is like.
We don't know what the metaverse is. Yeah,
exactly. So, I mean, you just have to kind of go.
You know what part I don't like so much? The whole glasses thing, like the whole AR, VR. Like I find it's like I do not think we should. Yeah, we should be wearing Ray-Bans. Where right now I can look at Chirag and not be sure if he's recording me.
Yeah, that's weird to me.
And seeing me in gray.
That's totally
blue.
weird.
I find that so weird, and that's happening. I mean,
I don't know
Facebook
why
just
that.
came up.
Yeah, that's weird. That's weird.
And Snap is working on this, and
but Snap did this, and then Facebook copied it.
Snap did this. Well, as always, I mean, Facebook copied it. But to me, I mean, we're getting off topic, but this really also moves in a kind of privacy realm that's very odd.
I think I agree, but probably that's our generation talking. Yeah, maybe. Or maybe like, 2 generations.
Again, we're going there again.
But the idea is like, I don't think younger people have this conversation. They're used to kind of living their whole world on social media. And so like I'm out with, I don't know, my nieces or whatever, and they're, they're filming and they're taking pictures and they're talking to their friends, but like they already live in this world.
2 more questions for you. Question number 1, in terms of the region here, do you foresee us in, 10 years, whatever the number is, not being able to go into a branch anymore?
Yes.
All of this being digital. You think that is, so the current, whatever bank it is around the corner will become a cinema or something?
Very much so.
Okay.
I mean, my own experience right now.
Yeah, I think all of us, many of us.
I never go to the branch. I had to go to a branch. And what's funny is, so this is this is recently, a month ago or whatever. And I remember going to the same branch, many years ago, I would go to the same branch in the same location. I went to that location. I couldn't find it on Google Maps. I went to that location. It was closed. Yeah. It was closed. And I went to the next place, which was really far away. And I said, you closed that branch. And they said, yeah, it's been closed. We closed like 20 branches over the last 6 months or something.
It's profound effect on commercial real estate. It's going to happen, right?
Of course, but it's happening in every kind of brick and mortar.
All retail in general.
Right?
And just to kind of finish on this topic, so what's the end game for you with Baraka? I mean, is this a company that you see yourself building for the next 200 years? Is it something that you feel like with the right opportunity, given how, lucrative but also exciting fintech in general is, you could be selling to a larger, or incumbent or a commercial bank, or how, when you think about this, I know you've just started, but has this, and it presumably is something your investors may ask as well, how do you look at an exit strategy, or you're sort of like, I'm in it, let me just sort of, work and see what happens?
Honestly, I don't think about an exit strategy at all. Okay. I think about how we can improve our product, the different ways that people can make money now and in the future. We're focused on this product today, but there are so many ways that people can invest or will invest in the future. So my mind is always racing about all of the different things that we can incorporate to enable people to make money, especially retail investors.
And you feel that because there are the Robin Hoods of the world, you have a playbook. So you've just recently, congratulations, graduated from Y Combinator, which is a very prestigious incubator, probably the most prestigious in the world. That probably gave you a playbook of other companies doing something similar, especially in kind of more developed markets, the US or Europe, etc. Do you feel you have a playbook for the next couple of years, or do you feel that this region is a bit different and therefore you take some elements of maybe things you learned at YC and things you've seen from companies that are a bit more, started a bit earlier, and you do it for yourself? You know what I mean? So it's kind of like the Uber Kareem kind of concept.
Yeah, you have to, we're not trying to take a model from somewhere else. We're trying to build a model that works here. And there's nuances to this market here that are very different. And so I guess some of the early learning that we have is you cannot, we're not in the US and we're not in Europe and we're in the Middle East, and that comes with many, many different challenges and expectations.
And opportunities. Did you feel that the YC program was able to help you with that, or was it very US-centric in the way they...
They're not, I don't think that they're very US-centric.
Okay.
I think
I'm not claiming they are, I'm asking.
I think that it's an incredible program. And they have the ability to kind of look at, all of the different businesses that they funded all over the world and say, this looks similar in nature.
Talk to this guy or this
Yeah,
person.
exactly. And they help you kind of find people that have had similar experiences, and they share their own experiences looking at thousands of companies on an annual basis. I mean, that's helpful, right? And so they don't say like, you should do X, Y, and Z. It's about, understanding where you are in your company life cycle and understanding, all of the different elements that go with that, like financing and how to build product and all of these things. And then also part of that is market, right? How to build for your market, putting that all together and then building your company around that. They don't try to tell you, hey, just do what Robinhood's doing in the US or, other people are doing in different parts of the world. It's them helping you understand all of these variables that come with company building and some of the stuff I didn't used to think about. To be able to build a product for this market, not the other way around. You don't build a product for another market, in here. And so that, is a huge learning experience. Tremendous, absolutely tremendous. And the network is just unbelievable. And I can reach out to any of the founders that are in that network and ask these questions.
Yeah, and I'm sure it even helps you with future fundraising, just
everything.
Generally. I guess like a stamp it out for. It's like a...
Yeah. It's an incredibly powerful network. It's not like what people think. It's not the traditional venture model. It's not how you build a business traditionally in venture. And I kind of came from a little bit of that background.
Offline, which surprised me. That's interesting.
Yeah, I mean, like I came from this background of raise a bunch of money and go build and, move really fast. And there is that element, but like there's an element of like, know what you're doing, build thoughtfully. As needed, don't overspend, don't overhire, don't go crazy. You're a very small fish. Don't kind of like...
Don't burn all your...
Yeah. And so if you just take your cues from investors, you'll just be raising a ton of money and just going crazy, trying to build and, acquire more market share. But it's a bit empty. And YC is the opposite of that. It's basically, build thoughtfully, make sure you have of substance, right? And then go scale. And then when you scale, it's that much easier to scale because you've built the right product. We're still building the right product.
No, sure.
And we'll be building it for many years to come,
It's brilliant.
But yeah, that's the big takeaway.
Well, thank you. Congratulations. I think it's great. We wish you the best in your journey.
Thank you. Thank you for having me.
Really enjoyed the conversation.
Thank you, Hashem.
Thank you. Thank you for joining us again on the Lighthouse Conversations with me, Hashem Montasser. We're produced by Chirag Desai and our content director is Farah Al-Sharif. You can tell us what you thought of this episode by leaving us a review in your podcast app or find us on Instagram at thelighthouse_AE. And please share a link with your friends if you've enjoyed this. We'll see you again in 2 weeks.